Hi, everyone. Welcome to episode 25 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing for ALN Apartment Data. I'm joined by the star of the show, Jordan Brooks, our Senior Market Analyst. Jordan, how are you?
I'm great, Patrick. How about you?
Doing well. Today, we're talking about the article from the August newsletter. The article is called An Updated Rundown on Rent Growth. So, in the first section of the article, you wrote about apartment demand, and you also briefly mentioned single family rates rising and the affordability issue on that side. Have we seen any positive effect from rising single family cost on the multifamily side yet?
I think the short answer is not really yet. We've certainly seen a decline in single family construction starts already. Monthly new residential sales have declined pretty significantly already. But for multifamily, if you look at July net absorption, which is the most recent full month of data that we have, July absorption was actually lower than June's. June's was lower than May's. And again, this is really the traditionally strong part of the calendar for multifamily demand. So in the portion of the calendar where we're expecting robust demand relative to the rest of the year, at least, demand has been on the decline. And so I don't think we've seen a boost yet from that single family side. That's something that may materialize, but it's going to take some time, I think, to really manifest.
Well, you stated that March of 21 last year was when rent growth really started to take off. How's this year through July stacked up against that same period last year?
So the rent growth last year, as you said, really didn't start until March, and then really has not come back to a sort of pre-pandemic norm level since. If you look just kind of year to date through July for this year, average national effective rent growth for new leases is at about 7.5%. That's just about identical to last year through July. So in that sense, it's been the same. But as we've said, the rent growth really didn't start until March of last year. So that 7.5% through July was coming, March, April, May, June, July. So really in a 5-month period. Whereas this year, rent growth was elevated in January and February all the way through the year. And so on a month over month basis, the growth has been a little bit more shallow through July. But again, the overall rent growth has been the same.
Well, seasonal trends at the tail end of the year usually mean a cooling down on rent growth. On the other hand, though, a major driver of rent growth has been that elevated occupancy from the massive absorption in 2021. Now, I think you mentioned that excess is unlikely to be fully unwound by the end of the year. So where does that leave us as we look ahead?
Yeah, I mean, there's a lot in flux right now, right? A little bit more than usual, probably when we take into account sort of the macroeconomic picture, the geopolitical issues, and kind of what's going on in the industry. So, we expect new supply this year to be roughly in the range established over the last handful of years nationally. So the occupancy question is really going to come down to monthly absorption. It's not going to be either a lack of new supply or a glut of new supply. It's we're expecting kind of a typical level there. So absorption has declined for 2 consecutive months, again, during sort of this strong period of the year. And it's been very low all year. October through December is usually the weakest part of the year for demand. So kind of we've been consistently low this year. We've been low through the strong part of the year. And then now we have the traditionally weaker part of the calendar coming up. And so for those reasons, there's not a whole lot of reason to expect some significant boost on that side, at least for this year. And then there could be some sort of positive boost, as we've talked about, from the single family side. But again, if that materializes, it's probably going to be more concentrated in the class A and B space for multifamily. Those are typically where we see attrition into single family home ownership. So with all that being the case, I think average occupancy will continue to decline. It's already down about 0.7% so far this year. But last year, the gain was 2.5%. So we've still got quite a bit of cushion to work through in that regard. So conditions would have to really deteriorate for the rest of the year to work through that remaining almost 2% that's been built up. That could happen. Obviously, some sort of exogenous variable. If we go into some sort of deep recession and we see job losses, we could see something like that. So where that leaves us, though, is that really the seasonal effect is going to have downward pressure on rent growth. We also see the downward trend in occupancy, which usually would take some steam off of rent growth. And so as a result, we mentioned in the newsletter that we might finally see monthly rent growth dip below 0.5% in the remaining months this year, which hasn't happened in some time, going back to last year. So really kind of looking further ahead through the end of this year into next year, I think that one of the big questions is going to be once we get into the spring of 2023, and we would expect demand to start picking back up again in the spring period, where does occupancy stand at that time relative to where it was going into the pandemic? And that where we are there is really going to influence what's going on in the rent front.
Well, I know that you're going to be back in Dallas in maybe a little over a month from today that we're recording for the AAGD State of the Industry. It's a dual event. That's also the Business Exchange. First time they're doing that. Tell us what else you have coming up.
So I'll be speaking at the Connecticut Apartment Association September 10th, doing a market outlook presentation there. I'll also be, let's see, where else am I going to be? Denver, the Metro Denver Apartment Association. I'll be speaking there September 14th, which I think is actually going to be in Vail, but it's the Apartment Association of Metro Denver that's putting that event on. And then, as you said, later in September, I'll be speaking at the AAGD AATC State of the Industry event. And also, our other analyst, Darren Patrick, is going to be in Omaha, Nebraska, I believe September 13th. So be on the lookout on our social media for all of those. And then, of course, we'll be updating the blog with additional content as well, alndata.com/blog.
Awesome. And, we always post about upcoming events and our new blog content that we put out. You can follow us on social media to find that. It's on Twitter at ALN APT Data, or you can just search ALN Apartment Data on Facebook or on LinkedIn. You can subscribe to our YouTube channel, click that notification bell. That way you're always notified of our latest content that we put out on our YouTube channel. Jordan, thank you so much for joining me today. And I look forward to hopefully seeing you next month whenever you come back in town.
Yeah, see you next month in person finally for the first time in a while. So looking forward to that.
All right. See you.
Bye.